So usually the key assumptions and the sources and uses table is located at the top of the LBO model. So it's a starting point of the LBO model. So we want to add a few rows in between. Actually, we need more space than we think. Let's do a little bit of formatting. This part's going to be about the scenario selection. So we are going to make, in the end, some operating scenarios and the financing structure scenarios, as well as the circuit switch as well. So we're going to put it somewhere that it can be seen most easily. We're going to copy this and around here. Now we're going to enter the entry assumptions. So entry assumptions. Let's also put in some navigators on the front, since this model is going to be extremely long. What we're going to write here is the purchase price. So a per share basis is much more easier to understand usually, because it can be compared with the current price very easily. So we're going to do a per share purchase price, and we're going to compare it to the current price. And we're going to assume a premium, a control premium, that's going to be paid from the current price. So that's going to be the purchase price. So rather than just, inputting random numbers in here, it seems much more logical to put a premium percentage to the current price, and that's going to lead us to the entry purchase price per share. So we're going to put in some simple units. So this is going to be in dollar terms. Premium is going to be in percentage terms. And obviously these two cells has to be formatted as assumptions. So we're going to use our traditional yellow backgrounds with some dotted border lines. So we're going to assume that the current price of the stock is $7.5. And usually the premium, the control premium, as we mentioned in our 201 class, is 20 to 30%. It could be higher, it could be lower, but for the base case, we're still assuming we're going to assume a 25% premium. So Control Shift 5, let's change it to a percentage format and assume a 25% premium to the current price of 7.5, and it's going to lead us to around probably $9.5. Yeah. $9.38 of purchase price. So we can see that this is quite factual, but of course it depends on the actual date that we're doing this. But the real important one-line assumption is the premium. Whether we assume it's 25%, 30%, 20%, the IRR is going to change dramatically, and we're going to see that in later courses. Now we can calculate entry value. So we wanted to know the equity entry value, so the equity value, as well as the enterprise value. And in order to calculate equity value, we need number of shares issued. 25 million shares were issued for this company. So this is going to be million shares. So equity value in million terms should be the purchase price times the number of shares. So $234 million. If we want to convert that to enterprise value, we need net debt. So we need the net debt balance. We need the net debt balance as of 2023. Let's say 2023. And if you go to the balance sheet, we have already provided you with, we've already calculated net debt. So it's a negative net debt. The company has more cash and short-term financial assets than debt. So it's going to decrease enterprise value. And then we can also calculate the entry multiples. The two main multiples that we really want to know is the EV/EBITDA multiples and the price to earnings multiple. If you want to calculate EV/EBITDA, we need, actually let's change these to the orders for consistency, because we've stated equity value first. So in order to calculate price to earnings multiples, we need the net income. If you have, LTM net income, that should be the best practice. Unfortunately, we don't have LTM for now, so we're gonna use 2023 full year net income instead. And same for EV/EBITDA multiples, we're gonna need the EBITDA for 2023. Net income, we're going to link it to the $14.3 million net income and the EBITDA as well, which is 34.3. We're simply going to divide equity value to net income, and we get an price to earnings entry multiple of 16.3. We're going to do a little bit of formatting. Remember, if you're not familiar with these shortcuts or any of the Excel functions, please go to the Excel 101 for Dummies, and we highly recommend you that you listen to Financial Modeling 101 in advance. And the EV/EBITDA multiples as well, we're going to simply divide enterprise value with EBITDA. And the entry multiple for now is 5.9 times the EV/EBITDA multiple. So yeah. So would you say that this is a high multiple? Well, it depends. It depends on the industry average. It depends on how the peers are doing. It depends on the time of, the current price. But generally, it seems very low, even for a consumer industry stock. It seems pretty low. Let's just put some random numbers to see if these are working properly. Let's say a 50% premium, and the multiple goes up, but still not that significantly because the starting multiple is very, very low. Yeah, so we've finished the entry assumptions. We're gonna come back to it as we proceed, but we're going to leave it like this at this moment. And now let's move to our fund sources and uses.